Now, while the Twitter IPO filing has the business world abuzz, it was Verizon's record-setting $49 billion bond sale that made waves earlier in the week. Its initial success appears to show pent-up market demand for safer, income-generating investments like corporate bonds instead of riskier stocks. But as Liling reports, the window for such investments may soon be closing.
It's a historic corporate bond sale that market observers say is well-timed, well-priced, and well-executed. Verizon raised $49 billion on Wednesday in the largest corporate bond deal ever, dwarfing the previous record holder, Apple, which sold $17 billion in April. The telecom giant plans to use the money to finance its $130 billion buyout of Vodafone Group's 45% stake in Verizon Wireless. The move is a big deal because of its sheer size, but also because Verizon is regarded as a safe bet for investors.
It's also a safe harbor for investors who are worried about the fact that the stock market might be a little frothy. It's an opportunity to buy a #1 blue chip piece of debt.
For individuals and institutions hungry for decent yields or returns on their investments, this was an opportunity with little downside risk. Verizon is one of the largest wireless companies in the world, and the purchase of Vodafone's stake in the company is expected to rank as the second largest deal ever made. Verizon's massive sale also raises the possibility that other companies would try to take advantage of the current ultra-low interest rate environment by selling bonds to raise money before rates go up again. Now, interest rates have been rising on expectations that the Federal Reserve may soon begin to taper off its stimulus program. That would spike interest rates, which makes Verizon's debt sale well-timed.
Verizon, to the extent that it had a choice of when it could do this, wanted to lock in a relatively low rate. If they did this 2 years from now, interest rates might have been much, much higher if the trend right now continues.
Which would make the Verizon deal one of the last big debt offerings that allows companies to leverage some of the lowest interest rates that we'll likely see for a long time. Liling, CCTV, New York.